Hello, everybody. My name is Nicole Elliott, and I'm a technical analyst and private investor. And today I thought I'd talk about commodities. The reason for this is a number of my colleagues and friends and that have told me and asked me whether their stockbrokers or their wealth managers are correct in suggesting that commodities would be a good investment for 2021, this coming year. Now, this is not really their area of expertise, so I'm, not surprised that my friends sort of double check with me in a way. But I also understand that because certain stock indices do look very expensive, as do all sorts of safe commercial paper and treasuries, they are obviously scabbing around for something to suggest. They're currently suggesting the usual suspects, gold and oil. But, commodities are such a vast array of different things, and they all condense down into one word, commodities. I can't bear that, so I'm going to dig a lot deeper with you guys today. And first of all, we're going to China, to the city of Dalian, which has one of the biggest agricultural futures commodities exchanges in the world. And my first chart is that of eggs. I bet loads of you didn't even know that egg futures existed. They do, and they've been running since 2013. This is a monthly chart. And as you can see, over the last 6 weeks, really, because we're only mid-January, prices of eggs have soared. These are prices yuan per ton. They've absolutely soared. On this chart, I put a horizontal red line, which is the secular resistance, where we peaked in 2014 and 2019. So that has history. We've got an interim sort of level at the 5,000 yuan mark, which is 2 standard deviations above the mean regression, which is that blue line. And as you can see, not only have we broken both of those upper levels, but we've now quickly retreated, forming a spike high on the 18th of this month. I think this is probably done and dusted. It's done enough for the moment. And while it may not collapse, I'm not expecting this to collapse by any means. I would expect that over the next 6 to 8 months, it retreats down to the mean regression level, which is currently at about 3,500 yuan. So that's one of those, which is not a buy. My second chart is also from Dalian, and this one has more history. Again, it's a monthly chart, and it goes back to 2003. So with soybeans, we have the soybean crush. You've got the beans, the oil, and the meal. We're looking at meal here, very much used in animal feed. And as you can see, this one has actually, it's a similar theme here, where most of the time you hold in a wide range between 2,200 and 3,600 yuan per ton. But every now and again, it goes a bit sort of whoops. And I think that's what we're seeing now this month in January. But also do note that it has been moving higher for 7 consecutive months from a fairly subdued level, I should add. So we might potentially also have a spike high above that upper horizontal resistance, above Fibonacci retracement resistance, and at a badly drawn downtrend line. My third and final chart, we switch over to Canada, something called canola, known in Britain as rapeseed. This is a quarterly chart, and you can see this is a particularly volatile instrument. And once again, this one too is reaching secular highs, not record highs, but nearly there. It has a sort of a spike. It's drawn in its horns so far, but we've got to get through the whole of this quarter to be sure about it. So today's lesson from my charts is what not to do, not to listen to advice from the wrong sources, and not to believe that everything is a one-way street. Good luck, everybody. See you next week.